Hey, what's going on, guys? It's Ryan here, and also
Namaya.
Queen Namaya, the goddess of all gods. But this video is going to be about something that a lot of us have known about from the very beginning. We're not going to sit here and try to paint all these indicators on your charts and tell you this is the holy grail of being able to win, and this is the indicator that's going to do it. We're going to break it down to that back to a foundation of nothing. So today's conversation is going to be about naked charts, why they're so powerful, why it's the only thing you really need, and we're going to go into details on how to actually look at it, how to properly mark it so you know exactly where the charts are going to be going in the future and pretty much for the rest of the time the forex is going to be around. So with that being said, let's get right into it. Let's go to the next one. All right. There you go. Let's do that. Identifying center of gravity, where price must go, and market structure.
So these are the things that we're going to identify today, because most people don't know how to identify. No, most people don't even know what the center of gravity is. They've never even heard of it. This is something that I turned the corner of because I found it, noticed that it was there, and just want to share it with everyone. So what you're getting today are things that you're probably not going to get anywhere else.
This is content that big merchants won't even tell you about. Like, this is the stuff that the whales use to look at the market. The banks use, right? They have their own stuff, but when they break down the chart, this is exactly what they're looking at.
All right, so the first thing we're going to talk about is each market has a center of gravity. Above this center of gravity, you will find price points that indicate sell with strength, and below the center of gravity, you will identify price points that indicate buy with strength. These points of weakness in the monthly chart show the most strength for support and resistance, and knowing this can help you map out the market for years to come. So basically, what I'm going to teach you will allow you to map out the existence of any market that you are looking at. Because if you can capture what the market does, the things that it must do, regardless of what your indicators say, regardless of what the guru says, there are rules to the market that it must follow. And so if you can identify those things and see those things no matter what time chart you're in, then you can lay out the entirety of the market and what you're going to be looking for. So basically what I did was go to the monthly chart. When you go to the monthly chart, you bring it up. You can, if you look really closely at what you're looking at here, let's draw. You can see this center of gravity right here. And if any of you have a blueberry indicator, if they've learned from you, yes.
If any of you have used my method on the EMAs, the blueberry is the 800 EMA, and then the red, the ketchup's 30. Yeah,
I'm just talking about the blueberry for now. So 800 EMA, which is the center of gravity of the market, and you can see that play out while you're using it. You see that the market goes and stays with that center of gravity no matter what. So this is where you can identify that center of gravity without that indicator now. So you go to the month, you identify the center of gravity. Anything below the center of gravity, as I said, a price point, you can tell where the strength in reversals was. So you can tell where the market lost its strength to keep going that way. This is weakness. This is weakness. This is weakness. All of this is weakness. You can tell where the market had no more strength left and it turned around. All right, so now that you've identified the center of gravity, you can go into those points in the market that are obvious. As you can see, they're very obvious. And you can identify, all right, if it's an obvious point down here at the bottom, these are going to be buy indicators. And if it's up here at the top, it's sell indicators. Now, are you going to place pendings all over this and sell it? No, don't do that. Or pendings all over it and buy it? No, don't do that. Watch it. Start testing out what it's going to hit and when it's going to hit. You'll start seeing exactly what I'm trying to show you. Is there anything that you would like to speak about this that has helped you to identify what you're looking at?
I think the only thing I can really touch on with this is I started with naked charts when I first got started, not understanding how everything worked, but then I got into the market maker method. So I got used to seeing a lot of the indicators on the charts. But the one thing about indicators, guys, and the reason why you really need to start getting yourselves used to a naked chart is the indicators are lagging. They're not right. They're delayed. And the people that use the indicators are using them, assuming them that they're going to look a certain way. And I'm guilty of that. I used to do it all the time, to the point where, oh, I've seen the way this TBI looks. Oh, I've seen the way the EMAs look. I know it's going to do this, and then sometimes it just doesn't do it. The indicators are there really to just keep people occupied, thinking that they understand the sporadic movement of the market. But in all reality, the market has specific parameters that it must reach. And when you really understand that it has a certain algorithm and that it has parameters that it has to touch, you really start looking at it from a very, I don't want to say broad, but a specific point of view where you're just sitting there waiting. And I think the biggest thing that you're going to be taking away from this all is patience, right? If you guys are trying to trade every day, this method will not work for you. You can try to trade every day, but you're going to be forcing setups in your head, and you're going to go crazy because you're not seeing any indicators that you're used to seeing. But if you're starting from a fresh point and you're looking for this, then this is going to be the thing that's going to set you apart from everybody else. You just need to understand that every chart, every currency, every commodity, it has parameters that it needs to touch. And when you really start seeing how everything plays out, you won't really need any other indicators. You won't need the lag. You won't need to try to trade every single day. You'll be waiting for that one setup that you know is guaranteed.
Yeah, and so when you're identifying the center of gravity, go to your month chart and then literally look at the center of the chart. Like this one right here, I had 1, 2, 3, 4, 5, 6 points where the market in some way bounced off of it.
Yeah.
So I used this as the center of gravity. It's also the center of the chart. It works the same way. It's very easy to find. You don't really have to try too hard. You just look for the center.
And what you're going to realize is price tells you everything. This is essentially price action, but broken down in a way that hasn't been explained before. People are used to broken lows and highs, and they say, oh, it's an uptrend, it's a downtrend. But there are certain areas where once it does break a certain high, it does test a specific low, right? There are points that it must retest for you to even think about where to enter from the future. So,
right.
Where price must get perfect timing.
Right. So right here, for example, all right, so price broke this level right there, here, and continued down, right? So when it broke that level, it came back up and tested again this point. Used it as its support or as its resistance. Same thing right here. If you look at all of this, it has to retest. Now, the slide that's next is going to be a lot easier to explain it than this one right here.
This is just showing you guys how to really set, just to show you how price over time respects specific boundaries and how it needs to break. And once it does break, you'll see that it retests certain areas. This paints the picture for you.
Right. See, I drew these lines just so you can see how it does that, because this one was met by this. All of that was one price point, and that one, it retested that low there on that one. So this right here, when this one came down and tested, it was testing this. Well, I call this the low, even though it's the upside right there. This point right there is what it was testing. All right, so I'm going to go to the next slide because it's a lot easier. I just wanted you to see the structure on this one. All right, so this is the meat and potatoes right here. So no matter what they have taught you, the market has rules that it must follow. This is why all indicators do not give you the accuracy that you could have if you knew these rules. So rule number 1, if the market breaks a level in the opposite direction of where it has been going, it must pull back and break another level. So right here, the market right here had been going in this direction, right? All that time that it held this point, held this point, held this point, held this point. It never returned to those points. Those were all trap traders. that got stuck in the pullback. It never returned. But then it made its high right here, and when it came back down, it passed this first level, broke the level. So now I'm looking for the bottom of this point for where it's going to test. So basically this zone right here is where I'm looking for the market to go for me to enter. Now the market came down, broke that level as we discussed. It pulled back up, touched that point. These are things that it must do. Came back down. Now I want you to look at this. It broke this level. And then when it pulled back, it was pulling back to test this point. It bounced off of it, but when it came back down, it left the wick down here. It didn't pass this level. It didn't close below it, like with a full candle. It just left the wick. So that was my first indicator that this was not going to continue to go down. And then it came back up and it went through this point that it was supposed to retest and bounce off of. If this would have been a continued sell, it would have bounced off of this point and continued to go down with no problem, but it didn't. And it not only didn't, it surpassed the point that it touched right here. So now all bets are off the table, and now this sell has turned back into a buy. All right, so what is this white line that's going down the center right here? This white line, so if you look at the structure that I have, this is what I'm normally looking at. It's where these reversals happen. So I would be looking for this entire market to have passed and broken this line right here for it to be a complete reversal. All of this up here, all this action up here, there's a trend line that this is keeping. So it has to pass and break this point. Otherwise, it's continuing that trend line going back up in that reversal, or that continuing. So rule 2, the market is not in a reversal unless it has broken at least 4 levels on M15. You need to look at M15 for those 4 levels. At that point, you can guarantee yourself 3 days of a drop in the market and grab the pullbacks. All right, so here's the pullbacks. Let me clear this drawing.
Make sure you guys understand that. Your trades are literally going to be you catching pullbacks. That's
yes.
it. You're catching pullbacks. You're not catching the reversal.
Yes. So here's your pullback. Pullback 1, pullback 2. Now this would have been pullback 3 right here had it followed the rules.
If it wouldn't have left that wick, things would have been way different.
Yes.
But if it would have closed, then you would have been able to identify, okay, this is the zone, this yellow line is the zone that it needs to retest for me to look for an entry. But because it didn't do it, you don't look for a trade. It's all bets are off. So
yeah, so
this doesn't even work.
If this would have came down and left you a solid candle going down,
yeah,
and then turned around, and then turn around, right? Say a solid candle going up, we got colors backwards, but say it was a solid candle going up, you know that the next few candles going up are only going to lead to it testing here and then eventually dropping back down to test this level here.
When you guys identify these levels, you'll start being able to set pending orders, right? The object is for you to not stare at your charts all day long.
You need to be out 90% of the time.
Yes, you need to literally look at the charts, identify your couple pairs that you're trading. You're not trading all 36, all 38, whatever there are. You're trading the pairs that you are comfortable looking at, identifying the levels, and then you're simply waiting. When you see that it has to go up to a certain point, then you can place your pendings and you can just literally go to sleep. You can go away. Why? Because the market must follow these rules. They have to retest certain zones if it's done correctly. If not, you'll lose. So it's about being patient. It's about waiting for these reversals. It's about waiting for broken levels. And when you identify these levels, then you can place your pendings accordingly.
So what I look for when I'm looking for this trade is I'm looking for this exact same structure. I'm looking for what you normally look for as a reversal.
Mm-hmm.
And so though I can take this point and I can take this point and I can make money off of it, it's not a guarantee to me. So for me, this trade is off the table because it hasn't broke this bottom point yet that tells me that that's a reversal. And the moment that it tells me it's a reversal, that means when it has broken this point down here, it's going to pull back, bounce off of here, well, off of this point. It'll bounce off of that and go back down. I'm going to take that point and I'm going to write it down. And then I know I got 2 more times of pullbacks after that. Guaranteed. Because when it's in a reversal, you can guarantee that you have 3 pushes down. So you have 2 of those pullbacks that you're going to be able to take regardless, and guarantee yourself money instead of questioning it or wondering or not being able to sleep at night. I don't want to take trades or you to take trades that are not 100% certain that you are going to capture the pips that you are looking for. And that's what this, I don't know if I covered that center here, but rule number 3, the market is not a random event. It has, if it has hit a price point previously, it will use that same price point to move it now, either to bounce off of or break through. So meaning you can look back in your charts and you can identify price points that the market has already bounced off of or resisted, and you can map those out and then see the market still has to use those same price points to move. It can't pick a new price point that it hasn't already had in the market already as a price point that it bounced off of or resisted, because that is an algorithm. And like we've been trying to tell you, is that it is coded to do a specific thing at a specific point, regardless of what is happening in the economy and all these other things.
Yeah, that goes, which is why you guys need to understand this is patience. That's probably going to be, out of everybody that's watching this right now, patience is going to be the hardest thing, because I know you guys want to make money. I know you want to be trading every day and looking at the charts. I get it. I was there. Like, it makes sense. I know. But you cannot force a setup if it's not there. Once you understand the parameters of how a market's supposed to move, especially on your pair, then all you're doing is just simply waiting. Come look at the charts Tuesday, Wednesday, Thursday, and that's it. If it's not there, you're not trading that week. You're not looking at it. You need to understand all of this. And that leads me into the other thing is, news is a distraction, and all indicators are a distraction.
And the market is completely predictable.
And this is the part we were explaining in our other videos, is if you understand that this thing has been programmed to have certain parameters and to have a specific zone that it always has to go to, then this thing actually has been predetermined on where it's going to start. This thing had a start date. This market has an end date. It's already done. The future has been told. It's literally, you are just sitting there waiting for certain events to happen. So when they call news, the news doesn't matter. They're gonna play out certain moves in the market and say, oh, that's because of news. That's not true. It's because it hit a certain point and had to go back to a certain level. They hide it and they blend it with news to fool you guys, thinking that news is really the thing that's going to make the market move. That's not true. By understanding these levels and understanding how they all work, I don't want to get too deep into it, but you can predict certain events to happen, like 9/11. You can look at the 08 market crash. Like, all of them tie together.
The EU market crash.
The EU market crash. There's all of it is coming. Like, if you look at how everything's working together, there's gonna be another market crash coming in the next, this year or going the next. I honestly think it's this year, but it's due for one. It's hit a certain parameter that is leading you to believe that it has no choice but to move in the down direction.
It's following the same market structure, no matter if I'm on M15 or if I'm on the monthly chart. The same rules apply on how it operates.
Yeah.
It's just a fractalized version from M1 to the monthly. So if I'm looking at, say, the monthly, and the monthly is showing me that it has already passed a level, a big level, and it's pulling back, and it's got two more levels to drop at least, then I know that that monthly market is going to keep dropping for years, and that I could sell it for years.
Yep. Look at that. They're so focused on. But the China trade is the reason why if you guys saw the market crash on Monday, how the S&P 500 and the Dow all dropped like 600 points, 700 points. That wasn't a random event. All right, this leads you. I don't want to go. Like I said, I don't want to go too deep. But I'm saying
it's just the basics, so they can get the idea of what we're doing here.
It wasn't a random event. It was easily planned. It was easily seen. You could have foretold this simply by marking your charts the way that we have right here.
Right. So this was basically all we wanted to show you with this. We'll get more in depth with our students that are with the one-on-ones with us. But we wanted you to see that there's an entire new way of looking at the market out there, and that using the indicators is not the way to go. But that's all I have to share today.
Yeah. Thanks for hopping on, guys, and we'll see you on the next video.
All right.